And we're off. All right, good morning, everybody. Happy Saturday. Wall Street Jesus here. Saturday Sweep Series. We're open to everybody today. So welcome everybody on social media. Obviously, welcome to all the Steam Room members as well. Today, I'm going to try to keep it a little more concise since we're open to the public. In other words, I'm just rather than go through each and every detail. As you know, whoever's a member out there, we like to look at each and every sentiment indicator, individual sweeper, whatever the case. We do a lot of Q&A. I want to keep this webinar a little shorter and more concise, so this way anybody who watches it on recording will get the gist of it, rather than having, if they don't have the time to sit through all the mumbo jumbo we usually do. I like the mumbo jumbo, don't get me wrong, but we'll try it this way today and we'll see how it goes. So it'll be a little, hopefully shorter, but quicker to the point. All right. And first off, I always forget this because sometimes I don't realize we're doing this open. So let me get this out of the way. WallStreetJesus.com. For anybody who's not a member out there and you have any questions on any of the lingo I'm using, the terminology I'm using, or just in general of what it is we look at on a day-to-day basis, especially on the flow side of things, you could go to WallStreetJesus.com, ST, like my Twitter handle, not street the word, okay, and click on the strategy section. And again, they're quick, easy to read, little short blogs, but you'll get the point, okay? You'll get the point from simply what's a sweep and why I feel it's important, what got my attention initially as far as sweeper activity is concerned, and then, just different ways that sweeper flow, sweeper activity, wise guy activity, whatever label we end up putting on it, can be used efficiently. Okay. A lot, especially on the retail side, a lot of retail traders want stock picks out of it, and they think it's just buy and sell signals. And if you look at it through those lenses, I think you're missing out on a lot of edge, a lot of quality out there. All right. There's no such thing as buy, sell recommendations that are going to get you rich from somebody out there. It just doesn't exist. All right. And you don't want that anyway. You want something that you can build confidence in. You want something that you can incorporate into a strategy that you're comfortable with. And that's what this is potentially. If you see it, if you see it the way I do, if not, everyone's entitled to their own opinion. All right. So very simply put, if you want to dig a little deeper into what we're talking about today or on any other webinar, you can go here and take a peek. Okay. And if you do have an interest in a trial, we offer a 3-day free trial, no credit card. Okay. No obligation. You just can sign up for 3 days, get a little feel of what we're looking for. You're not really going to get a good taste over 3 days of anything, but at least you get an idea of what the hell we're looking at each and every day. All right. And then you'll get 50% off the first month. We've been running this special. We kept it this way. We got decent feedback from it, so why change it? Okay. And we also, if you're interested in just private Twitter, you're a part-time trader, you're not in front of the screen all day, you have a strategy, you're just looking for the flow, whatever the case may be, we've spun that off. You can get that by itself for $59.99 a month, and that's just private Twitter access. Okay. And a popular question I get, private Twitter is included in the premium package. The premium package, you're getting everything, and that includes private Twitter. All right, that's done. Let me get that out of the way, and let's get to some of the fun stuff. So we get a nice day out of Friday. All right, and a couple important things I want to touch on off that Friday session. Even this latest rally, okay, it doesn't look like much on the chart. We spoke about this during the week on the webinar. okay, from these lows, basically this flush to here, you can see there was some money-making opportunities if, again, you allowed things to set up, you were waiting for that setup, looking for entries, and, you got lucky to fire at something that moved pretty decent. A lot of us really didn't get our hands on much because we were looking for things to sit a bit and accumulate as the market sat, or maybe sold off a little bit more. But the popular individual name was Facebook. Okay, that was the only aggressive activity. That was the only activity out there that got my attention, that there was some real buying coming in and not playing for just a squeeze. Okay, there was a lot of smaller squeeze type flow, which we can touch on quickly during the webinar later on. All right, but the only aggressive size activity that came into individual names was Facebook. All right, there was one, again, terminology, one missile in particular, a decent dollar amount in a sweep, and there was a lot of smaller momentum activity around it. Okay, another popular name that people touched off this recent move was Twitter. I didn't, but a lot of people in the room got their hands on some Twitter. There was some put selling activity, some smaller sweeps, decent sized March activity that came later. The stock was already in rally mode at that point. But there was another name like Facebook that saw some impressive buying, okay, because there hasn't been a lot of it. So you had the Facebook and the Twitter, that pretty much the consensus top picks that we had this past week. And both traded rather well, even with the market weakness. Both Facebook and Twitter held up well. I mean, Facebook, you could see, looking a lot different. Is this the start of a new rally? Probably not. Who the hell knows? But this is what I stress, even in the worst bear markets. If you're patient and you're selective, this is what you're looking for on the long side. Okay. And you can see put a bottom in and just gradually started to creep and climb higher. And more importantly, buying coming into the weakness on down days. Okay. And Twitter, that too. Twitter actually looking better overall. And you can see here, Twitter actually looking a lot better overall. All right. So those were the two names that came out of this most recent rally. And the rest was what I like to label squeeze type flow. Okay, a lot of times it comes off extreme bearish sentiment, meaning the public is really all negged out, lathered in protection. A lot of our indicators are signaling that they're doing so, flashing green. And then what we'll see, rather than that quality buying similar to what we saw in Facebook or Twitter come in, we'll see a lot of smaller, short-dated action, momentum type action. It's pretty obvious they're playing for a squeeze, right? They'll come in and they'll start sweeping 500 lots of weeklies in ETFs, in high beta names, and that type of stuff, okay? And what I've learned throughout my experience over the course of my career, that type of activity, especially in a bearish environment, the rallies are short-lived. Okay, they still at times could be extremely powerful. Okay, especially in bear markets, vicious, powerful, but a lot of times they're short-lived. Okay, and this latest rally, it could have gone even more and still landed in that category of a squeeze off sentiment, basically. But this is pretty much, if you're looking for an example, this is what you're looking for. Okay, this is what you're looking for. So you're looking to buy weakness and you're looking to sell into the rip, and mission accomplished. Okay, a lot of times what traders do, they want more, they get greedy, and in this type of climate, that's where you get bitten in the rear end, you get frustrated. You hear a lot of traders, okay, on both the bull and the bear side, talking about chop, okay? And you hear it constantly, chop, chop, all this chop, and you hear complaining. If you realize and you're calling it chop, okay, and you continue to play the same way as you're playing in a 2017 rally, or even on the put side, you're looking for that, big follow through to the downside, and you're getting chopped up. If you continue to play the same way, stop complaining. Stop complaining. And it goes to the point, guys, of what I try to stress of, coming in every day thinking you're Livermore or Paul Tudor Jones and you're going to trade both sides and every day there's going to be an opportunity. That's when you get chopped up. Okay, whether you're bullish or bearish, the guidelines, okay, that your thesis, what it's supposed to be in this type of environment, is pretty simple and clean cut. Wait for the setup, and then when the setup's there, fire. Make sure you have your risk managed, right? If you're wrong there, it's not going to knock you out of the game. You're just wrong like you would be in any other type of market condition, and case closed. Okay? And in the interim, while you're waiting for that setup, there shouldn't be any, I don't know what you guys call it, FOMO or whatever, name you put on it. That shouldn't exist, because if you're complaining about getting chopped up, that should be enough to get you to stop doing that. Okay? I mean, if I get tired of hearing people complain about chop, I can imagine your own ears, right? So you have to get a handle on these type of things in this game. Otherwise, you're going to drive yourself nuts. Okay, and it goes back to the point, like I try to stress, when you come in each and every day and you think there's going to be a quality setup each and every day, it's going to be a costly education because it doesn't exist. All right, so basically right now, okay, we're going into next week where if you're looking on the long side, this is now falling into your setup. Okay, and the reason being is this is pretty much what I've started doing just to get to the point for people who maybe don't have the time and the patience to look at the details. I like to look at everything. You know what I mean? Everything that goes into these signals, I just, I have an interest in it, right? I'm fascinated by it. So I like to dig into all this stuff, but there may be traders out there who don't have the time or don't have the passion to do so. So what I started doing is this each and every day at the close. And basically, this is a quick summary of all the things that go into the sweeper activity and the key sentiment signals and what they're showing. All right. So a squeezometer basically is an extreme short-term sentiment signal indicator we look at. Okay, it's even more of an intraday indicator. All right, that is leaning bullish, meaning any weakness early next week, this will likely officially flash bullish signals. Okay, and in English, the explanation to that means that the public, the retail money, is feeling a little too bearish right now. Okay, it's at an extreme. That's what that's telling us. And more, again, based off intraday, if you look at Friday's session, we were hoping for even a lower number. This was like pulling teeth, even getting to where we are now. But got close enough to where it's important anyway, in coordinates to everything else. Okay, and I'll talk about that now. Short-term trader sentiment. Okay, so that's an end of the day reading, and it's more of kind of what I was explaining, a shorter term swing trade type indicator, right? This setup here, we had a bullish signal into this low here. Okay, So that's what that indicator signals. Or Friday session, we got a bullish signal there. Again, meaning it's a contrarian indicator. So meaning that traders were feeling a little too bearish, got a little too bearish on Friday. Okay. Then the intermediate term. And for me, there are a lot of indicators that I like to put into that spectrum because it's longer term. Okay. You're not looking necessarily for that quick squeeze per se off of it. And this thing can stay bullish for the course of weeks, months, while the market still looks like crap. All right. So there are a lot more indicators that get put into that mix, and it's obviously a longer term time horizon. A lot of signals out of those intermediate indicators are flashing bullish. Okay, there's a couple of key ones that I really would like to get there. They're really close. Okay, they're not there yet. They're really close, but the majority of them are, again, telling us that the public money out there is positioned a little too extreme on the bearish side. All right. And the put the calls, you guys know the put the call ratios, the total put the call, the equity put the call, all that stuff. They are elevated, meaning they're showing a high amount of protection of put buying out there. But again, no signs of panic. All right, something we haven't seen yet. And a lot of times could come at the end. Okay, not all the time, but a lot of times could come at the end where you get that final capitulation everybody's talking about. All right. But one thing I want to stress is I'm not waiting for that, right? As a tactical player in this game, as a nimble player in the game, I'm not waiting on that because I've seen bottoms come off elevated put the calls and no panic. And the type of market you would see that is this type of market, that rolling bear market. This has basically been a rolling bear market. As much as SPY looks like it just started selling off in October, if you look under the hood, sector by sector, there have been groups and names that have been absolutely annihilated, and that started long before this October sell-off. Okay, so when you get that rolling bear market, that drawn out bear market environment, more so you'll get where the put the call remains elevated and you never get that panic. Okay, unless there's a news event which could happen, especially now these days with so many clouds over us right now. So again, the point there is we definitely are looking for it. We would like to see it, but being that we're tactical anyway, we don't have to wait around for it. All right, as long as the other things are showing what we want to see. All right, and then basically, like I said here, I put some comments here, usually at the end of the day, talking about the sentiment signals and the flow. I missed the flow. Okay, this is another link that's been missing throughout this whole correction, and it's normal. Okay, it's normal because very rarely are you going to see impressive bullish activity in a correction throughout the whole process. I mean, that's why we're in a correction. Okay, but this is like my timing mechanism, I would say. And this will tell me a lot about what type of squeeze may be on the horizon. Okay, so the overall flow has been mixed. Markets bounce. You see some bullish activity. Days like Friday, markets start to sell. You see put sweeper activity. So it's been mixed. And the sweeper activity has been mostly momentum based, meaning what I just said. If they're in a squeeze type mood, okay, and the markets are going to bounce off lows for that particular day or remain green, we'll see small sweeper activity come in, banging weeklies, front month, not really much of any quality out there. Again, an example, Facebook was, in my opinion, the only action that stood out before the last rally, and some ETFs. ETFs are very common when they're playing just for a squeeze rather than individual names. All right, so the flow, as of right now, is not signaling any major bottom. They're not positioning for any major bottom yet. But there were some signs Friday that a squeeze may not be too far away. And we'll go and we'll look at some of the stuff we saw Friday, that, in my opinion, may be giving us a heads up that some buying is around the corner. Okay, and you can see I mentioned that at the end here, that there's not much quality buying, but with Friday's action, there were some signs that we got a squeeze on the horizon. All right, so this is basically what we look at every day. Okay, and no matter what your strategy may be, bullish, bearish, writing premium, whatever it is, if you are a member and you're looking to incorporate the flow and sentiment into your strategy, this is basically your compass. This is your guideline. Okay, if you're going to if you're a member and you're going to buy into a hot squeezometer and put on a decent amount of long risk when this is telling us not to, then you heard me say this before, and I don't mean this in a rude way. You shouldn't be a member. Why are you pissing away your money? You know, the reason why, if you choose to sign up or you did sign up and you're a member, is because you are either looking to build some confidence and add something to your arsenal to maybe get you to that next level of consistency, okay? Or you already have the confidence, which most of you who are members for a while, I mean, we have members that have been with us a while, should already have confidence in this. Okay, you should already have confidence in this. If you don't, in my opinion, you haven't been paying close enough attention, or maybe you're trading some strategy I don't know of that this doesn't apply. Okay, but at least at the worst case, this will keep you out of trouble over the long run, especially in this type of climate. And we may remain in this climate, for the foreseeable future. Okay, it's very easy. We can go into a 1-2 year consolidation type phase in this market where, there's no new highs, there's no big bull run that comes out of it. And each and every time the markets sell off and it looks like it may roll over, buyers step in and squeeze them. We may be in something like that. And that's where this stuff becomes even more important. Okay, if you want to ignore it because you've seen the one time where this has shown that sentiment's starting to lean bullish, and there was another down day or two that you could have taken advantage of. If you think you're clever enough to do that, then that's up to you. All right, but the majority of traders I see get into trouble is they'll see these signals and then they'll spot something on a chart or Fibonacci or an Elliott wave. And because of these signals, they didn't take advantage of that one opportunity in a stock for that day or the next day. And then they decide, you know what, right now, I'm just going to ignore this. But again, it goes back to my point that if you're here, you see the value in it, what are you doing there? All right, this is my seatbelt. Okay, without this, I'd be out there chasing every rally and selling into every whoosh. It's that simple. I'm not afraid to admit it. Okay, without looking at this, even to this day now, looking at it as long as I have, without it, I'd be chasing every single freaking rally thinking it was the start of a next bull run. Okay, because that's how I'm wired emotionally. So this is my seatbelt. All right. And at the same time, I'm not afraid of being wrong, because I can be wrong in the most bullish of markets, right? I could be wrong when the markets are looking as strong as hell off quality sweeper activity. And if I don't treat it the same way then as I do now, I wouldn't be able to be around 20 plus years in this game. Okay, so the fear of being wrong doesn't really enter the equation. Sometimes I get a little more selective, I get a little more picky, and I punch myself in the head for it when the signals align, and I'm just a little more selective. But what I'm saying is, you can't be afraid of a loser, because a loser can show up no matter what. All right. And if you go back and look at statistics and backtest and all that stuff, a lot of times as a trader, over the long run, you will lose a lot more money chasing those rallies, right, into retail buying, rather than buying when you're supposed to be looking to buy. All right. And that's what it comes down to, right? Probabilities, odds, that's what this game is all about. All right, so that's the gist of it. Anybody who's new and trying to get an idea of what we do, that's the gist of it. All right, so I can tell you now how I'm approaching this setup here, and then you can get an idea now of how you need to look at it, right? I can't tell you what you should be doing. I don't know how much you're looking or capable of risking, right? I don't know what type of trader you are. I don't know if you're in front of your screen all day long. I don't know what instrument you're trading. So I could just give you an idea. My job, I feel, is to give you an idea and tell you what the signals that we're looking at are saying. And then a lot of times I just share with you how I'm looking to take advantage of it. Okay, so the way now that I'm looking at something like this, right? I know I have sentiment on my side, right? The only thing I'm missing right now, as we mentioned, the sweeper activity, right? So we know the retail money is bearish. I want the pros to show me that they're taking the other side. Okay, again, that's like my timing mechanism, especially in this environment. All right. So Friday, and we'll talk about that. That's a nice segue to talk about Friday's action a little bit. There were some signs that they were looking maybe to put some money to work, positioning for a squeeze. Okay. But I wanted to see more. Sometimes that backfires and there's a squeeze and I don't have enough. Okay. But when I make a dent off a setup like this is when I get everything I'm looking for. Okay, so I don't mind not having enough and the market squeezes, right? If I don't have enough and the market squeezes, great. I made a little money, right? In a tough environment, I'm going to sit tight and allow the market to set up again. That's the way I'm looking at it. Okay, if things do play out the way I'm hoping they play out, right? And sweepers get really aggressive into this setup, that allows me to play with a little more confidence and get aggressive. Okay, and I'll feel better about that. All right, so for me, I feel like mission accomplished on my end when if sweepers are getting aggressive, I want to get a little more aggressive according to my standards. Okay, if sweepers aren't getting aggressive, I don't mind not getting aggressive and not making as big as a dent as I would like off a squeeze. Okay, so that's my outlook on it. So based off, here's what we saw Friday. Let's talk about that quickly. Okay, and then I'll get to your questions at the end here so we could tackle them all in one shot. By the way, this is one of the sentiment indicators that go into short-term the short-term setup, okay? Especially in this climate, it's been solid. And you can see, again, all Friday, minus 200, that's a buy signal. That's a solid buy signal there. All right, and I'll mention a couple of the indicators to you guys and tell you where they stand. All right, and so you get a little more of an idea. For those of you who are members, I'm going to throw all this shit out. Oh, excuse my French. I'm going to throw all this stuff out there after the webinar and all on private Twitter in the room, so you guys can look at it, because I know a lot of you guys like to look at it. All right, but this is one of the indicators, and you can see every time they get a little too bearish positioning over there, Ridex. There's a squeeze, they chase the rally, they get bitten in the rear end, they get a little too bearish again, rally, squeeze, they get bitten in the rear end, and they're scared again, okay? So that's basically what we look for here. Where's this? Oh, I got two things I could show you. Okay, here, again, this is something I post in the room and on private Twitter for members. Basically, the top bull bets on the day. Okay, this is not stuff I played. I didn't play all these. Okay, but these are orders that caught my attention. Okay, for that particular session, and the best of the action Friday was by far in ETFs. Okay, and those of you who know me know that when it comes to ETFs, when it comes to individual orders, I really don't pay too much attention to them, okay? Because they're so freaking active. There's a lot of hedging in SPY, in Q, in VIX, okay? So there's not a lot of clean directional stuff. At least that's obvious to me and us, all right? But sometimes we see orders that just stand out. If you remember, not this past squeeze. Was it this past squeeze? I don't remember. One of the squeezes that we had most recent. You remember that one SPY bet that caught our eye? I explained to you it was like an Uzi, right? It was like 80 orders deep. It was basically one sweeper spraying SPY calls. All right, so that's similar to this, okay? This order here, $10.5 million. This guy comes out, sweeps 39,000 plus. Oh, I got something I want to show you guys. I'll show you the details of the order of Trade Alert, you guys, so you get an understanding of what I'm talking about here. Hold on. Okay. All right, so this is what the order looks like when it's all said and done. Fed 276 calls, sweeps multiple exchanges, takes out every offer and then some above the ask. There's the premium there. That's some big wood. All right. That's pretty much the details, right? The time of the bet, all that stuff. Here is what made up the order so you can get an idea. Oops, where is it? Oh, here it is. All right, so this is all Trade Alert breaks down basically the whole thing here. Is this the one what I was saying? Strike, 6% above spot, 19% probability. Where is, oh, here it, no, oh, here it is. You see that? Oh. Hold on, guys. I'm bad managing this stuff here. Hold on, navigating around. You see that there? That's what I mean by spray, you know, that Uzi effect. This guy basically, any thing he could get his hands on, or she could get his hands on this line, he wanted, or she. All right, that's what that tells me here. All right, and this is, hold on. Basically the VWAP, volume at price, and where it traded. Okay, look, 38%, 16,000 contracts of the 40. He took out 268. That's the high print. He paid up to 268. But you can see this is where it comes in. Okay, so took anything he can get his hands on, a total of 42,000 at $2.63. All right, so those are the type of orders, especially individual names, forget it, but those are the type of orders in ETFs that will get my attention more so than just, one regular block or a sweep, no matter what the size. Okay, it's that aggressive behavior. All right, and then we saw a bet on the Qs, not as big or aggressive, but still significant. December 31st, 165. These are the quarterlies. Okay. So, on the eye, this is actually a better looking quality bet than this is. This was more aggressive. The play was more aggressive in behavior and buying. Okay. Obviously spending 10 million plus too. All right. But this looks like a more quality type order, right? Not that far out of the money. Lays a little wood, 2 million, swept multiple exchanges, opening bet, blah, blah, blah. Okay. So those are the two ETF bets that really stood out. There was some other stuff. I think EEM, right? I think EEM caught a big bet. I forgot what the other thing was. There was something else too, but when I see that, all right, this here, guys, for example, you hear me talk about Bazooka Joe into the 2016 lows. This is what he looked like. Okay. He came, hit this. He came, hit this. Then he hit more SPY. Then he hit Apple. Then he hit Facebook. Then he hit IWM. Okay. So that's what happened into those 2016 lows. It was a bet like this that led to an onslaught of call buying. Okay. So we didn't see that carry over into names like we saw into those 2016 lows, but maybe this is the start. That's my point, right? Maybe this is the start of that. Maybe whatever group this is, whatever syndicate this is, they said, all right, we're going to hit up the ETFs. We'll hit up the SPYs and the Qs today. We come in early next week. We got a little weakness. Let the riffraff do some selling, and we'll start tattooing other things. So that's what we're looking for now as an indication that this market's ready to turn around. Again, that timing mechanism. All right. What I did, I usually wait for confirmation in the names, because the names, once you see it pour into the names, you're not too far away. But I took a piece of these Qs with room that if we're down here, right? If there's more weakness or we're hovering around these levels or whatever the case may be, and they get more aggressive, as I just explained, they come back by more, I will do the same. Okay, so that's how I'm playing it. As far as other activity in names, what I'm referring to, there wasn't any of it. Okay, we had this bet, which is a decent bet, decent sized bet. Okay, in Caterpillar, this was the only solid sweep in individual names. And there was a lot of rolling Friday expiration and all that stuff. But this was the only really clean cut bet. Looked clean anyway. Okay, everything else I had question marks around. Could roll from this. It looks like they closed this, So the best actions, the stuff that I don't have a question, right? Like, again, this is an ETF, but if this is a name, which you're not going to see something like this, you'll probably see something like this, let's say. But if this is a name that catches that type of action, there's not a question in my mind what the player's doing, right? If there's nothing closing, a size position out of open interest, if he's coming and buying this is obviously a bet. He thinks there's a squeeze coming. So I don't want, anytime I have questions or I'm not sure about the order flow, it it doesn't fall into that category. In a bull market, in a bull trend, you can get away with playing that stuff, right? You could get away with it because even if you're wrong and it's a roll, and you see it on CNBC a lot, right? They talk about rolls constantly. They don't even know it's rolls. They're talking about rolls. In a bull market, if there's other bets in that name or the sector, the stock's probably going to go up anyway. So you could get away with it. You don't want to fool around with that now. And trust me, when, I don't want to jinx things, but when they are looking to get into the lows in a big way, it is obvious. There are no questions left to be answered. That's my point. There's no, you think they're trying to hammer out a low here? That doesn't exist. And again, 2016, Bazooka Joe, he didn't leave a question there. Right? He hit SPY and Qs, and you were like, all right, it's just ETF action. Maybe, somebody hedging, who knows? And then, boom, 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 he hit every high data name in existence for $1 million. Then came back and bought more SPY and IWN. There were no questions. There were no questions. Okay? So that's the case there. All right? Now, what else can happen is what we just saw. Okay? And it's very possible. So you got to understand this. This is important. What may happen, we may see something like this again. Okay? And what I mean by that is this market, let's say, goes lower Monday, right? Or Tuesday, you got the Fed next week, and you got to squeeze off the Fed back to here. And we didn't see that barrage come into the names. Okay, and it could be that it's just those smaller squeeze sweeps we start seeing going bananas. And that's fine. Again, that's why I put on, I started to buy on the Qs. And, Monday, Tuesday, if there's any other action, I'm looking to add. So if it's just a squeeze, that's fine. What I would do at that point, I'm not going to chase the squeeze. I would allow it to set up again. And here's the ideal scenario, okay? For me, the ideal scenario here is that this thing bounces around here, right? And maybe there's another whoosh here that gets everybody riled up. And then all of a sudden they tattoo that, right? And I have ample opportunity here to put on some long exposure. That would be the perfect setup for me. Okay, but again, keep in mind, you want to make sure you know your risk. That's the most important thing to worry about down here as you do that. All right, because somebody can get shot in the head or a building blow up, and Bazooka Joe may have to take a nice little hickey, and you got a market that gaps down, right? There's no guarantees in this game. But the way I look at it is, if this plays out like this is what I refer to as a high probability setup for a nice squeeze. And that's what I'm looking to do in this market. See, I'm like, Joe, look, I'm like a Madden. Look at this. High probability. And here's your little percentage thing there. All right. So again, we've got over all these webinars, the same thing, right? On the long side, we want to avoid chasing into this. That's where we want to minimize our risk. Okay. We get this. We get sentiment set up. We want to look for the action that comes into this. So in other words, the action that's coming into, this is the important thing. Any flow that you're seeing come into this, you want to try to avoid putting on added risk. That's my point. Okay, people don't realize that. Because a lot of times what you're seeing anyway is these guys here are rolling. All right. If they're going to buy, if there's new fresh money, big money that's going to come in, what they're going to do is when this happens, instead of down here, they'll come right here and attack. and then you'll see the market do that higher low thing. You understand? But the last thing you want to do if you're looking to take advantage of long setups in this market right now is add on risk here. You want to do it down here. And for me, again, the sweepers are how aggressive I'm looking to be off this setup. Okay. Now, here's where you come in as your own trader here. Okay. You can't ask people what to do, no matter who they are. This is where you have to evaluate yourself. You have to evaluate your risk, and you have to say, okay, maybe I'm just looking to put on a play in this setup, right? I'm just looking to put on one play into this setup. I get a squeeze, I got a nice winner. I don't, I have a loser, and I'll wait for a setup all over again. Maybe you don't want to take that gradual, more aggressive type approach as flow comes in, right? You don't want to put on that type of risk in this market environment. I can't blame you. But these are decisions you have to make. Again, this is the stuff that you guys have to take the weekend, look in the mirror, look at your trading accounts and figure out not how much money you want to make, how much are you willing to risk? And then you'll have an idea. If you're just going to go on the fly and be like, oh shit, Jesus said extreme bearish sentiment, let me buy some shit. I mean, come on. All right, you gotta be ready for the opportunity. So, flip side, right? You think we are on the verge of Armageddon here, right? Credit market starting to show cracks. Trump might get impeached. You got quantitative tightening overwhelming everything out there right now. Okay, there's enough negative bullets out there, you can find them. If that's your thesis and that's your game plan, that the highs are in, this is a excruciating bear market, and I feel there's more money to be made on the downside. If that's your feeling, okay, you cannot just go short anywhere you want. See, that's where a lot of traders, they thought that because the market changed, that they can just go and short and it's going to be easy money. Okay, and from not trading in an environment like this in the past, what they don't realize, the rallies in a bear market are even stronger than they would be in a bull market. That's what makes it so difficult. Okay, so what makes it difficult is you have to, just like you're looking for entries, at times emotionally you wouldn't be looking for entries. You have to be looking to start your short position when everybody else is buying. Okay, when everybody else is talking about a Santa rally and sentiment is not at extreme bearish levels, it's above neutral at or approaching extreme bullish levels. And if you don't think that's going on here, you're mistaken. Okay, this here, we had a higher extreme bullish reading in this than we had at the top here, if you can believe that. Because everybody had that FOMO, thinking they're going to miss a Santa rally, right? They didn't want to buy this. They thought we might have a breakout here. You started to hear that B word, breakout. Oh boy. If you're playing the short side, that's the time to fire when you hear that B word. Okay? Oh, we're back over the 200 day. We're back under the 200 day. No, we're back over the 200 day. This is where you're looking. I'm not going to tell you it's easy. If you think it's hard to start looking for long entries here, try shorting into this. All right? You want to be a little more conservative? You can be. Okay? And what you can do is wait for, signs maybe of things starting to roll over a little. okay? And you're looking at the same signals, guys. You're looking at the same signals. All right, that's the beauty of it. I think that's the beauty of sentiment and sweeper activity in general, that anybody, no matter what instrument, no matter what trading style, they're all looking basically for the same thing. Different readings, but they're looking for the same thing. Okay? So if you're shorting, you're looking for this to be above 50 at the least, right? Or hotter. You're same thing here. So you're looking for some red highlights here. The put the call, by the way, okay, this high here, the equity put the call had a 5 handle. You guys remember, those of you members, we were talking about that. Here, the equity put the call, anybody who was long, we were pooping our bloomers because that was a bad sign. So those are the things you're looking to take advantage of. And again, if you're members, I will highlight them here. Okay, not necessarily as much on the short side as the long side, but if I'm stressing how anybody who's looking to get long or put on risk should not be doing so here, that would be an indication, if you're looking to play the short side, off flow and sentiment. You know, the last thing you want to do, just like in bull markets, okay, in bear markets, you may get away with it over the short term. Okay, if, in other words, when this is all green, all right, and let's say the flow and the sweeper activity is all bullish, right? If this is all bullish and you still want to short, okay, you may get away with it because of the bearish environment for a day or two, sometimes longer. You may be able to trade and make some money. But the problem is, that's the worst thing that could happen. Because next time you short into the hole, into extreme bearish sentiment, you're going to get annihilated. You're going to get annihilated. All right? And again, like I said, the more conservative approach, I don't do, but the more conservative approach, if you're tactical, would be to be quicker and short as this thing's coming down, right? So if you're seeing put sweeper activity out there and the markets are starting to sell and there's no signs of any buyers, that's a window to short, especially on an intraday time frame. All right, but you know, holding overnight in positions and day trading shorts or puts are two different things. Okay, are two different things. All right, it's just like the long side, but even worse because the bear market rallies, look at these things. You think these are easy to sit through? If you're holding big picture, you think this is easy? Tough. All right. Anyway, to sum it all up, and then I'll get to your questions and some insight on your end. We look good set up into next week. We got a big week. We got the Fed. Okay, so that's a biggie. It's a big Fed 2-day meeting there we got right in the middle of the week. As of right now, things are on the sentiment side. If you're looking for a long entry, they're supportive on our side. All right, and what I will be looking for, if there's any weakness Monday, I will definitely be keeping a close eye on the sweeper activity because any signs of this into weakness on Friday, and I'm going to look to put on a little more long exposure. All right, and we'll see how that goes. By the way, I had on here too, here's some of the other bets. Okay, so you get an idea Friday, because there was other call activity. AU, that's a minor, so that's not necessarily a bullish play on a squeeze. The miners have had some bull flow as well as GLD. By the way, GLD I think was the other ETF that caught a pretty decent bet. AU caught some buying. WPM, which is the old Silver Wheaton. That was another miner that caught some flow. Micron here, bull bet. Citigroup, you can see, look at the sizes of these things. Like, you know what I mean? D, that's a utility name. Caught some bullish activity. That's on the bottom there. CLF, $40,000 sweep. Keys, I looked at that. That wasn't a bad sweep for this name, but it's a roll from December to January. I think it's a software name, Keys. Here's that WPM, one of the bets. Home Depot, small sweep. All right, so the names, I'm not going to lie to you. The names, the action names was not impressive. Was not impressive at all. All right, let me get to some of your questions here. And then we'll wrap things up. I'll leave you to your weekend. Hold on. Let me get in chronological order if I can. So I keep this at this level. Can you explain the Amazon blocks we saw last couple of days? Didn't understand how to read those. Yeah, Jason, that's why I know I don't want you to take this as arrogance and you know me better than that. But that's the type of activity that I just don't pay attention to. You know what I mean? If it's not clean, aggressive sweeper activity and I have to dig, it's not important to me. There's enough noise out there to begin with that it's not even worth trying to figure it out. Again, if we were in a bull market, maybe we dig a little deeper, right? But you want to see that clean, sharp, crystal clear sweeper activity. And what Jason's referring to, throughout the week, there were blocks. I think there were weeklies, right, Jay? I think they were in weeklies, and they could be just replacing stock positions, even though they didn't come in as tied. That's why the blocks now, too, Jason. There's these blocks now. I'm being honest with you guys. I don't pay attention to anything that's a block. Anything. Okay, we had a discussion in the steam room how maybe we should just take blocks off the board. If in a bull market, again, sometimes you see sweeper activity around it, or maybe you saw sweeper activity in the name and then you see a block a day later. Maybe it could add to the bullish thesis, maybe. But in this environment, if it's causing more harm than good, you really don't want to pay attention to it. And that's why, again, if you are a member or you're in the room, there's no reason to try to even figure this out on your own if you're unsure. Trust me, if there's a big bet in Amazon and it's clean, I will be screaming about it. I will be screaming about it. Just like I would be screaming about if Neil Diamond shows up early next week and starts sweeping DIA calls. Okay, I get even more excited than you guys do when I see clean action. So that's why, again, if you're unsure and you're not around or you didn't miss my commentary on the order, then ask. Ask. What do I mean by sweep? Yeah, Ben, again, you have to go to wallstreetjesus.com. All right, if you're unsure about the terminology and stuff like that, go to wallstreetjesus.com, the strategy section, and in an hour, you'll be able to get a decent understanding of everything we're talking about here on the flow side. All right. With some examples and stuff like that. What else we got? MU could be earnings bet. Yeah. Good call. Both Ani, Paul, you got MU earnings coming up. So very easily could be that too, without a doubt. What else we got? Ranchero, leave your drawings on long. I'm starting to see. You guys see a lot of comments on my Madden skills. I know it's impressive. I know. You understand? I'm a modest guy, but I know when when I'm on the verge of impressing people. Trust me. Why has premium gone up compared to this summer volatility? Yes, Jamie, without a doubt. IVs are juiced. And that's another thing too, on the put side, which makes things really difficult. Makes things really difficult. If there's selling pressure out there and you're looking to take advantage on the downside, you got to pay attention to that stuff, because the premium. I'll give you guys an example. I mentioned NVIDIA. Like, that's a name I would really like to see a missile come into. And the reason why, the put to call premium, which again I only pay attention to in this environment, is ridiculous right now. So they are robbing people on the put side in NVIDIA. Robbing people, flat out robbing people. All right. And throughout my experience, again, depending on the market though, in 2008, for example, it didn't matter, obviously. So it depends on the catastrophe. But when you see a big, huge spike in that put the call premium, usually there's a squeeze in the neighborhood. That's why that's the only reason I've mentioned NVIDIA a couple times to you guys, especially keep an eye out for any legitimate flow that comes in. Could be a missile, could be a barrage of action. In other words, remember what I told you guys about, just quickly, about the squeeze setups, okay? If you're hoping for that at least intermediate term bottom, okay, meaning the lows are in for at least, let's say, going into first quarter next year, right? And maybe there's some type of uptrend that forms, but we don't break out to new highs, okay? Maybe we do, maybe we don't. But something where, and trust me, it'll come, okay? There's going to be a 2-month window on average where we're going to be able to take advantage of the long side on swing trades. Okay, it happens all the time, even in bear markets. So in other words, I told you, with the Madden drawing, you get something like this. Down, buyers here, buyers here. You know what I mean? That type of thing. Again, it doesn't mean a whole new bull market's forming. Doesn't mean we're going to break out to new highs. Similar to what we saw over here, but we went to new highs. That's the difference. This. Okay, this is what I mean. Something like this. And then we could easily, let's say, top out a couple months into next year, or if it starts next year, top out here and then ba-boom. All right, so if we're hoping for something like that, from my experience, you will see quality sweeper activity come in. Okay, you will see good-looking orders on the call side come in. Okay, from my experience, that's what usually is the difference between that and, these things. Okay, sometimes you get like half decent quality, you'll get this. You get these bigger squeezes, right? You get the small little tiny sweepers, you get that 3-day squeeze. All right, so depending on what squeeze comes out of this, the flow will give us a good idea, even in the process of the squeeze, of what type of move maybe we have on the horizon. It's not going to give us levels. It's not going to tell us where to get out. But again, if we know that potentially, the order flow is quality, and we know potentially that they could be trying to hammer out a bottom here, then maybe if you got time on a name, you want to leave it alone rather than selling the rip. Or maybe you decide to roll them out rather than just sell them this time around. So we'll get that information. We get more information about that, as time goes on. And I'm always curious to see, how that shapes out. And again, the most recent is a good example. Those of you who are members know exactly what we're talking about, because there were a lot of questions and good questions. Why were we labeling this buying that came in here just squeeze flow, based off sentiment? And because that's what it was. All right, so we'll see what happens there. It's something interesting that may be ahead here. I saw that in the room, Tim. Coors on Wednesday. Yeah, Coors, you got Coors, they're buying some size leaps. A couple of them were blocks, I think. Some smaller flow around it. But these names, they're just, again, they're just not on their own. It's not going to cut it. It's not going to cut it. You get these little rallies and they roll over. You want to see some real sharp action come into a name like this with time if you're thinking about making a play here. But look at this, nonstop bleeding. These retail names, they've destroyed them. I think Tiffany too, right? Even the discount retail names, which I thought might hold up better, they're just torching everything. Look at this. This is annihilation in these things. But, you scroll back, right? If you scroll back, especially on some of these names and the indices, and, the selling's been vicious, but, look at Adobe. I heard people, on CNBC, complaining about Adobe, the good earnings, and they sell it off anyway. I mean, look at this thing, man. Look, this is normal. This is totally normal. If you ask me, this is a little abnormal. That this thing didn't have some type of correction like this along the way. It had little mini pullbacks here. Look at this. This is a parabolic move. So if you're wondering why there was good news and they sold it off anyway, it's just we're in that type of environment right now where, these things have just gone way too far here. Too fast, too far, too high. Let's see. Monday, we should get a lot of major breakdown talk with Sentiment Week. Yeah, hopefully. It sucks, Ani. You're the same way like me, that we got the Fed in the middle of things. I'd rather not that binary event thing in the middle. I always hate to get too aggressive into something like that. But yeah, I think any further weakness, any further red at all, you should get a nice buildup in sentiment. And we're still, as ugly as things have been. And here's the thing, okay? SPY and the indices, they don't even do it justice. Like if you look under the hood at some of the groups and names, there's annihilation out there. Like the Fed lows this year, think about this. This year's lows still haven't been breached. You realize that? That Fed low off that panic attack of volatility, that's still all down here where that niner is. Look. So maybe that has to eventually get tested. You know what I mean? Maybe we do this with these squeezes in between, and eventually that, ultimately has to get tested. And maybe that's where the panic will come in, if there is any. Who knows? But, these indices, they don't even do it justice. You see transportation names, they're getting, look at this, XPO. XPO, this thing has been selling off in a straight line, okay? And then gap down on news. You think maybe somebody will do some dip buying, and then they come in at the open and buy more puts. Like, look at this. Oh, man. And then you had that yellow, the other trucker, which is cheaper, YRCW. These transportation names lit up. Look at this. This is some nice selling. Ultimately, when it's all done And again, I'm not trying to sound corny, okay? Those of you who are maybe new to the business, new to the game, all right, and saying, oh, my luck, I got started and look what I came into. This is a good time for you to get your beak wet, okay? Because when this finally comes to an end, and think about if there's more downside, like think about that, okay, which there very easily could be, all right? Think about where some of these things are going to end up. You know, there's going to be a lot of opportunity out there when this thing finally comes to an end. When? That's a whole other question here. Microsoft. Oh yeah, there was some. Oh, we're seeing that too. Good point out. We're seeing some put selling out there, some out of the money put selling, and usually that's some bullish behavior. But if you think about it, big picture wise, rather than, let's say, I'll give you an example, KWeb. Okay, this is the Chinese internet ETF. All right, and you could see got whacked with the China stuff, the emerging market stuff, and let's say you understand the market conditions, you're not sure about the upside, but you're looking to get long this thing off this disaster. You come in and they're selling puts, looking that they don't mind owning this cheaper. That's the way they're looking at things. KWeb, we saw some put selling activity, out of the money put selling activity on Friday. Okay, but again, there's a difference there, as opposed to like the outfit you told me that blew up off nat gas. These are institutions, this is big money that they're looking for entries cheaper. They want to get put to stock. You understand? So it's a lot different. All right. Yeah, J&J, this was interesting because if you guys remember, J&J, like a lot of these defensive names, had a decent amount of bullish activity this whole way up, right? And then all of a sudden, over here, we start seeing some put sweeper activity come in. And we were talking about it because we were wondering if they're just protecting their gains here, or maybe they're going to come in and play the downside on some of these defensive names. But the interesting part was that it really didn't go into the other names. It was just J&J focused. And then look at this. Look at the news they caught. And then, I guess that's why Gerald is bringing it up. You had it earlier in the week, you had put sweeper activity. And then right off the open, those momentum put sweepers just attacked it. And this thing fell out of bed. Unbelievable. That was like a 700, 800% play. Wow. Yeah, you got that news. But, it was tough. For me, it was tough because, again, you're wondering if they're just protecting profits because there's been some bull flow, but it definitely stood out. It looked weird because J&J doesn't really catch that type of action. Paul saying there was an order on the 10th expiring the 14th. That guy's going to be investigated. Probably. What else we got? Will is asking, how do you differentiate a sweeper that is part of an option strategy like a condor or butterfly? I see it. When they're combos, that's why, Will, I wish it was as easy as just setting up a scan and being able to determine what the hell's going on in that name just off that. Okay. Like, for example, I don't have it on here. Hold on a second. I'll show you guys. You guys know in the room, okay? The alert board is just simply a scan like this on the side here. Okay. That's what this is. Okay. It's got criteria and it's scanning for names that meet that criteria. Now, it's good a lot of times for big picture type scenarios, sentiment type scenarios, but you can't just look at that board and see a big order and assume that it's a directional bet. Okay, what I'm doing is I see an order like that, and then I'm going in and looking at the other flow around it. Okay, not only the other flow around it, what's in open interest, what action it's caught recently, that it can maybe roll a position or be attached to a position if it's tied to stock. So I'm able to tell Will off Trade Alert and the details of Trade Alert of whether it's a clean order or it's a roll or attached to something. So that's the answer to that question. And again, what if you are a member of the Rumor Private Twitter or you're interested in it, that's why you're there, for that. Otherwise, if you just want to set up a scan, I can show you guys free ways to set up a scan, and there's no reason to pay anybody for that information. Spruce Capital crushed XPO. Yep, right. That was Spruce. I remember, right? That was right. I think as the put action came in, it was that morning, I think, right, Jason? Spruce? I remember hearing that on the Squawk. Ben's asking, why don't you just short stock? Why use options? It can cause blowback. Ben, I've been playing this game for over 20 years, and I've been around many of traders. Okay. Two main reasons I've seen players blow themselves up in this game. Okay. And that's shorting equity and being on margin, or selling naked premium. Okay. So day one in this game, in 1998, when I really officially was playing with real money, and I'm seeing people blow up around me, I knew immediately what not to do in this game if I wanted to stick around. And since that day, I haven't done either of the two. Very simple. Very simple. Again, short or being leveraged, right? For obvious reasons, and selling naked premium. And if you don't know the reasons why for selling naked premium, then you shouldn't be selling premium in the first place, because you will blow up. I promise. That's a promise. If they do this to PG, why PG? I didn't see. Did PG was weak too? No, PG strong. These things are still hanging in there. Yeah. If the thing is, if you're bearish or looking to be defensive, what you want to do is if we get a market squeeze, you want to look to buy these things. You know what I mean? So in other words, PG here is tough, right? This is tough up here for an entry. But if the market squeezes and some money rotates out of this, and this thing has a pullback and finds a bottom, that's where you want to start looking for flow for an indication of an entry. Another group would be the Utes, the utilities. They've been on fire. All right. So again, if you're long term, or intermediate term, you're more defensive, and that's your thinking. When the market squeezes and these things pull back, you want to be looking for entries there. And I mentioned to you guys, usually we see more utility flow in individual names, not as much for some reason. I don't know why. I don't know. One of the top names, NRG. All right, so if you want to keep an eye on these on a pullback, which flashed a red niner on Friday, by the way. But look at this move. Look at this move. All right, so NRG is one of the utility names. a PCG, which is a lot different because it had negative news. So the chart's going the other direction. All right, but there's been some buying down there. EIX, which is similar to PCG, but has been bouncing nicely, you can see here. That's another utility that's seen flow. This D, see some flow from time to time. Dominion. And smaller flow, but this is one of the names I thought we would see more. Yeah. NEE, exactly, Maria. NEE. This actually has been a name in the past that I've done well with. All flow. And you can see it. They total opposite going on here. This NRG is impressive. You know, you got some Sharpies involved there. You got this NRG is impressive. So yeah, that's again a list of some utility names that you may want to keep an eye on if we do squeeze and they come in and maybe set up again. Another thing you could keep an eye on. Oh, I'm sorry, I keep forgetting that, Bill. Every time William Struck will remind me VST, a little cheaper one. That's another one, utility. Good call, Mr. Struck. All right. Another group that you may want to keep an eye on. There was a real nice order in the ETF. What the hell is the symbol of that REIT ETF? Throw it at me, you guys. That REIT ETF that caught that big sweep. I think it's with a V. Is it VGK? No. V. What's that REIT ETF? Maria probably knows it. Maria, do you know the REIT ETF? Caught a big order. I think it was this past week. VNQ. Thank you, George. VNQ. Okay, so this is something that where money may rotate into. A lot of people talking about this now as a potential play. You got a little bit of a pullback here. Hasn't really exploded like the Utes and the staple names. All right. But again, if rates are going, if the Fed's going to stop, right, then this would be in play. And this thing caught a really nice looking order, about as big as I've seen in that ETF. Where is it here? I've seen some big blocks, but as far as sweeps, let's see. Right here. Can you guys see that? So that's June. June 83 calls. Real nice bet. A lot of time, and you could keep on some activity there. And it's pulled back the last couple of days. It's pulled back. Oops. And you're probably better off. I don't know if you're going to play that group. I don't know if you want to play the individual names, right? Oops. Hold on one second. Somebody posted something interesting, and I screwed it up here. Hold on. REIT returned 90% of their taxable income as dividend. So it makes sense. That's why AMT, SPG, CCI, they're all doing well. I haven't looked at the names. I remember when these things were on fire earlier on in this bull market when rates were down there. Yep. Interesting. What else we got? Let me see. A lot of AMT's crazy. Really? That's American Tower? Wow. And this thing was out of favor for a while, right? Wow, look at this thing. I haven't looked at this thing in a long time. Woo. Very interesting. Yeah. So again, you don't want to, obviously you don't want to chase these things. You would look for pullbacks if you're interested in, again, want to remain defensive. It's tough to trade them. You don't really want to be too active trading these things. What else we got? Let me scan down here so I don't miss anybody's questions. Amazon we spoke about. Yeah, VIX. And here's the thing too. Like Friday, we saw that VXX call activity, if you guys remember, but they were Friday expiration. And somebody was looking for probably that big rollover and didn't really get it. I think they probably made a little bit of money on these things, but they didn't get the big whoosh. Let's see. Oh yeah, these are the December 14th. Here they are. So we saw a bunch of these things that they were adding up from the morning, you see. December 14th, Friday expiration, and a bunch of little sweeps like this that started adding up. But yeah, and a couple things. You guys who've been around know our main squeezes, right? You guys know ETF wise in this type of market what we're really looking for, what we want to see. We want to see the more aggressive, the better. We want to see VXX put sweeper activity. All right. My preference, if they're hitting up weeklies, that means they're looking for a quicker move, shorter term base, right? If they're hitting up like monthlies, front month, then maybe, it can last a lot longer. If they're hitting up everything, that's even better. Okay. And they can do that. So we want to see VXX put sweepers. That would be a good sign. We already spoke about DIA. That guy's been nailing both sides, right? Sweeping calls down here, sweeping puts up here. He's been money. All right. And the leveraged ETFs, we want to see some of that action. And you want to see enough of it. You don't want to see a small bet. Sometimes they can be a nice heads up for an intraday squeeze, some of the smaller ones, but you want to see some size, right? So if TQQQ, if somebody steps up aggressively and starts sweeping some of these calls, that could also give us a heads up that a squeeze may not be too far away. So those are the things we want to keep an eye on. We got some names here, PayPal and Square. Yeah, PayPal has seen some half decent action. I have some PayPal Febs, not a big position, but I have some exposure to PayPal that I just left there. And, it has held up. But because of the overall market, it's not really easy for it to gain some traction. The ranges, though, can be traded, I'll tell you that much, right? Every time this thing comes down here and market squeezes, this thing has been outperforming. So, but I think we're going to need some help from the market for these things to start, finding that next level. But they do look a lot better than everything else. Even some of these, right, the Visas and stuff like that, they've been holding up pretty decent. The cloud names, you got some names holding up. The problem is, the ZS came back. That had a nice quarter earnings. The problem is, Gordon, here's the problem. If the market doesn't cooperate, you're going to see this entry here is going to be a disaster. That's the problem. You understand? That's the problem. That's what I fear. You understand? As good as these things look, if this market is got more downside, it's only a matter of time before they find these things and hammer them. So that's the problem. Again, it comes down to the market. It comes down to the market. BAH, is that Baxter, Will? Oh no, Boo's hat. What's this? Oh, so this is a defensive name? Yeah, a couple of these defensive names have looked good. the problem with these things too, they've rallied a lot. Okay. And here's the thing. Okay. And I'm telling you this from experience. If we get into next year, early next year, if something worse comes out of this correction, okay, I'm not talking about a correction or a bear market consolidation. If there's some sort of credit crisis or some fear of that sort coming out, right, corporate credit, they're going to hit everything. They're going to hit everything. Because now this is not just bear market positioning. What happens is they go into liquidation mode. Okay. And when you go into liquidation mode, you look to sell the stuff that's holding up, right? If like Netflix and Facebook already have been destroyed, or you already sold those things, the next level of selling comes into these defensive names. So that's what you got to be careful of, especially when we've already had a move like this. That's what you got to be careful of. You know, it's almost like you want to see these things pull back, consolidate, and then get in for a trade type thing. But if you're going to sit in these things, you got to be careful. You got to be careful. You know, you got to be careful. And yeah, it does feel like that, William, but I mean, Gordon, but it kind of, we were, maybe it's a little worse this time around, but I remember in 2016, it felt like that again. It felt like that then. I remember it was Deutsche Bank that people were saying they were calling it the next Lehman, only a matter of time before it's done, you know? And, 2016 ended up being a great entry. Yeah, so what happened in 2016, Gordon, was you had something similar to what we're going through now. Okay, it was a growth scare and a worry of credit. Okay, DB coming out of Europe, especially DB was the focal point. All right, and this is basically what it looked like in 2015, 2016. Okay, so it lingered. Like, think about that. That's the 2015 low, right? There's your double bottom. There's your rally, not break new highs. And then look at this rollover again. And I remember here at its worst, and that's where Bazooka Joe came in bombing. It sure felt like that, Gordon. You know what I mean? It sure felt like that. So, you gotta, trust me, you're not gonna feel good with all the noise around us. It's not gonna make you feel good. It's not gonna make you feel good. A lot of times, once you start to see the reason that this market's been acting like this, you're closer to at least an intermediate term bottom, at least. Again, you go back to 2008, okay, and that's what everybody likes to compare it to because, again, that was an Armageddon situation, right? That was it. That's when your worst fears were potentially coming true. And before that final whoosh into the lows, where it just, again, you were hiding money under your mattress. You had a lot of fits and starts in between. Like, let's see here. This is 2007, right? So this is the top. Then look, down, rally, breakdown. Then look at this here, right? Little rally here, double bottom. And this is what I'm talking about. Even if we're in the worst bear market ever, potentially could come out of these lows. See this? See how it's like lower uptrend here? And you're not getting back to new highs, nowhere near it. But, you shook out a lot of short money. If you were playing longs, you had some opportunities here, nice squeeze opportunities. Like in this here, there was some huge squeezes in names. And then, look, breakdown again, right? Breakdown again 3 months later. And then another low here. And then, just an abbreviated one. And then this was Armageddon. This was the Armageddon state. And then it finally came to an end. This here. That's where you wanted to hold your mommy tight. All kidding aside. This is where I tell you bulls and bears were pooping their bloomers. People were scared to short and buy puts in this because you were worried about your money in the account. That's how this was. Okay. And that was the easy money on the short side. I'm talking about things just falling out of bed, potential bankruptcy. It was Armageddon. You had banks going under. Who was the next bank that was going to go under? Merrill Lynch forced to get bought out from Bank of America. And that was some crazy times. All right. But again, my point I'm making is that the rest of it, right? You see how it plays out here. It wasn't this. It wasn't just straight line down, whoosh. You had a lot of bottoms here that they were decent sized rallies. And the chart doesn't even do it justice. The chart doesn't even do it justice. Some of those rallies were powerful. Powerful. And then ultimately, here's the low in 2009. Crazy. 666, my friends. You know that? 666 was the exact low. Is that nuts? Yeah. 666 was the low on GE. That's right. Just recently. Crazy. This market have you scratching your head. All right. But so that's why, like I said, that's in the back of my head. No matter, Gordon, how bearish it may be, you have to have an idea that, this is how things play out. If you want to be patient for the long opportunity, you'll get opportunities like that to trade. If you're looking to play the downside, if you're looking for that side, you have to wait for that opportunity to align. So you got to be prepared for these things, no matter what this entails here. But I can promise you, at the lows, it always feels the worst. Hence why, the squeezes. The news, it always, in other words, like, for example, and then we'll wrap it up here, because there you go. I'm babbling again about markets. But for example, you have a market here, right? You have everybody talking about, oh my God, the fundamentals are so good. The market doesn't know what it's doing. The fundamentals, earnings have been great. What the hell's going on? That's all you constantly heard, right? And what the market do? Just continue to sell. Good earnings, continue to sell. Okay, and then what happens, you eventually start to see the reasons why the market has been selling in the face of even good fundamentals. You see the reasons, okay? But it's already in. You understand? It's already factored in. The market already factored that in. That's why the market has been pricing it in ahead of time. So my opinion is, I think the news gets worse. See, people are looking for good news. I don't think good news is going to save this market. If you're a bull and you want this is like the never-ending scroll here. If you want this market to bottom, how far would I go back to 1908? Look at this. If you want this market to bottom, you want the news to get awful. You want to hear that R word, recession. You want the economy to look like it's falling off a cliff. I think that's what we need. And then again, you have the Fed doing what they're supposed to do. You know what I mean? Or you want to hear QE. Yeah. But for you to hear QE, Tim, it's got to be bad, right? It's got to be bad. And I think that's, ultimately what the market is telling us right now. They're going to get the Fed and everybody who needs to pay attention, they're going to get them to pay attention. If it means they got to take this market lower, then they'll do it. The market will do it. You'll see, right? The Fed was talking a big game a couple of weeks ago. And then all of a sudden, they changed their tune. Yeah, this market, in my opinion, is already trying to factor in a recession. That's basically what it's telling you. That's basically what it's telling you. So again, we'll see. Again, the corporate credit market, people have their eyeballs on that, but there'll be some major rallies in between, my friends. Don't fret. All right, everybody. As always, thanks for stopping by, talking some shop. Next week, we go in with sentiment behind us. So we got some bullish support. We'll keep an eye on flow and for some further signs there. Maybe we can find a couple of things to get long. And again, anybody who's came in late, if you have any questions, just go to wallstreetjesus.com. You'll find everything over there. All right. Enjoy the weekend. Good luck next week, everybody. Big Fed week.